Welcome back to the Wealthy Good Life podcast. Today we're going to do a deep dive into something I think we all struggle with at some point,
Yeah.
taking control of our finances
Mm.
and how to really accelerate our journey out of debt.
Sure.
You sent me some really good stuff to review, and
Sure.
hopefully we can kind of unpack it all for our listeners and give them a really clear path forward.
Yes. I think that feeling of being overwhelmed,
Right.
like, oh my gosh, I have all this debt. Where do I even start? You can kind of take away some of those fears by giving people a step-by-step plan
Yeah.
to get out of it. Yeah.
Let's just jump right in. So the first step seems kind of like the most basic foundational thing. And it's something that I think a lot of people, they hear it and they think it's too simple.
Yeah.
But it's like you can't chart a course if you don't even know where you are.
Right.
So the first thing you got to do is just got to get crystal clear on what you owe.
Yeah. And that's really powerful, just the act of writing it down. Like every single person that you owe money to and the amount. So it's just like a very clear picture of your debt. Because it's one thing to say like, oh, I'm in debt. It's another thing to see like, okay, this is how much I owe. And then once you have that, then you can move forward.
Right. It just makes it feel so much more tangible and manageable.
Exactly, yeah. It's not just like this amorphous blob. It's like, this is the amount. This is what we're going to do to get rid of it.
Yeah. Okay, so now we know what we owe. Where do we begin to even tackle it?
So this is where you need a plan.
Yeah.
Because if you just kind of randomly throw money at different things, it might help a little bit. But having a plan is really going to accelerate things for you.
Okay.
So two main ways to think about it: the avalanche method and the snowball method.
Okay, tell me about the avalanche method first.
So the avalanche method, this is like you want to save the most money on interest.
Right. Yep.
You want to be as efficient as possible. So you're going to prioritize the debts that have the highest interest rates. So let's say you have a couple credit cards, maybe a personal loan. Look for the one with the highest interest rate, and every extra payment that you can, you're going to throw at that one.
Yeah.
While making minimum payments on everything else.
Okay, so that makes sense. Just from a numbers perspective, tackling the highest cost first.
Exactly.
Okay, what about this snowball method? What's that all about?
So the snowball method is a little bit different in
Okay.
that it's not necessarily about the interest rate. It's about the smallest balance.
Okay.
So you're going to find the debt that has the smallest balance, even if the interest rate is lower, and you're going to attack that one first.
Okay.
And the reasoning behind this is because when you knock out that first one,
Yep.
you're going to get a psychological boost. You're going to be like, oh my gosh, I paid off a whole debt. And then you're going to have that momentum to keep going.
Yeah, those quick wins feel good.
Exactly.
Yeah. They can kind of keep you going.
Yeah, they can. So while the avalanche method will save you the most money, the snowball method might keep you more motivated. So it depends on your personality.
Right. So it's kind of finding a balance of the emotional and the
Exactly.
mathematical.
Yep, absolutely.
Okay, so beyond the avalanche method, the snowball method, kind of focusing your efforts, what are some other concrete things that we can do to accelerate paying off this debt?
Well, one of the biggest things is any extra money that you get should go toward your debt. So I'm talking about tax refunds. Maybe you get a bonus at work. Somebody give you a cash gift.
Birthday.
Even if you sell some stuff. Yeah, birthday money, anything. Instead of looking at that money and saying, oh, I'm going to go spend this, say, okay, even if I just take a portion of this and throw it at my debt, that's going to make a huge difference in the long run.
Right, yeah.
Yeah.
Okay, so those are the big chunks, right?
Yeah.
But what about just daily or weekly savings? Do those even make a difference?
Those make a huge difference. If you think about it, your daily coffee, maybe you have a couple streaming services that you don't really use.
Right.
Those little things add up. So if you can even cut back on one or two of those, you'd be surprised how much money that is over the course of a month or a year.
Yeah, just being mindful of those little things.
Yes.
Okay, so something else I've heard of is increasing your payment frequency. Is that something that we should be thinking about?
It's definitely something you should be thinking about, especially for things like credit cards. So instead of just making one payment per month, why not split it in half and pay twice a month?
Okay.
And that can also help you with your credit utilization, which is how much credit you're using versus how much credit you have available.
Okay.
And so the lower that ratio, the better for your credit score.
Okay.
So making more frequent payments is only going to help you.
Yeah, that makes a lot of sense. Now, what about let's say you have a car loan or maybe a personal loan, something with a fixed term.
Yeah.
Is there any way to speed up the payoff on that as well?
Yeah. So in that case, you might want to look into refinancing. to a shorter loan term.
Okay.
So what that's going to do is, yes, your monthly payments will be higher, but you're going to pay off the loan faster, and you're going to save a lot on interest.
Okay, that makes sense. You just got to like front load
Right.
the pain a little bit
Yeah.
to get it over with faster.
And you know what? You're going to save money in the long run.
Okay, that makes sense. Okay, so another thing I've heard about is debt consolidation.
Yes.
Can you explain that to us a little bit?
Yeah. So let's say you have 3 different credit cards,
Yeah.
right? And they all have high interest rates, and you're kind of juggling them.
Yeah.
What you could do is you could consolidate that debt. So take out one loan to pay off all 3 of those, hopefully at a lower interest rate. So now you just have one monthly payment.
Right, okay.
It simplifies things for you.
That makes it feel a lot more manageable.
Exactly. And you might save money on interest as well.
Now, how do we go about doing that?
There's a couple of different ways. You could look into a balance transfer credit card.
Okay.
You could look into a personal debt consolidation loan. Or if you have a house, you could tap into your home equity with, a home equity loan or a home equity line of credit.
Okay.
But just be careful. If you're going to use your home as collateral, make sure that you understand the risks involved.
Understand the risk. Okay, so we talked about, different ways to pay down debt, but it's one thing to pay down debt. It's another thing to just like stay in control and not accumulate more debt.
Yes. So that is the biggest thing. Like once you pay it off, you don't want to go back into debt again. So how do you stay in control?
Right.
The biggest thing, a budget. You need to have a budget.
Okay, so when we say budget, we don't necessarily mean like restricting all your spending and never doing anything fun, right?
No, it just means like, where's my money going?
Okay.
Right? Like, how much am I making every month? And where am I spending it?
Okay.
So it's really just like a tracking tool. So you can see, okay, this is where my money is going.
Right.
And then once you see that, then you can make adjustments if you need to.
Right.
So you're not just kind of randomly spending money and hoping that you have money left over.
Right.
It's really being very intentional.
Yeah, intentional with your spending.
Yes.
And I think that brings us to that next step, which is like really avoiding like that debt trap.
Yes. So the debt trap is where you're spending more than you're earning, and then you have to borrow to make up the difference, and then you're kind of in this cycle of always, going further and further into debt.
Right.
So a budget is going to help you with that.
Right. Okay. So the budget helps you avoid the debt trap. Now, here's something that I think I personally struggle with a little bit.
Yeah.
You get so focused on paying down debt that you're like, I'm not going to do anything else until that debt is gone.
Yes.
And you're like, wait, I need to save for retirement?
Exactly. Or wait, I need to save for my kids' college.
Yes. So it's all about balance.
Okay.
So while it's very important to pay down your debt, it's also important to save for the future.
Okay.
So even if it's just a little bit, even if it's $20 a week that you're putting toward retirement, just do something.
Yeah.
Because the earlier you start,
right,
the better off you'll be.
The more it's going to compound over time.
Exactly.
Okay, so we've covered how to, figure out what your debt is, how to like attack your debt, how to kind of stay on track. But what happens when things get a little bit harder? Like maybe you're dealing with debt collectors, or maybe you're having trouble making your payments.
Yeah, that could be a really stressful time.
Yeah.
But it's important to know your rights.
Okay.
And know what options you have available.
So first of all, if your debt has gone to a debt collector, they have to provide you with something called validation information. And that basically tells you, like, this is the amount you owe, this is who you owed it to, and if you think that it's inaccurate, they have to tell you how to dispute it.
Okay.
So know your rights. Also, debt collectors are not allowed to harass you.
Okay.
So if they're calling you multiple times a day, they're using profanity, they're threatening you, they're not allowed to do that.
Okay.
So you can actually send them a letter, a cease and desist letter, and tell them to stop contacting you.
Okay. So I think this is really important to remember, because a lot of people, they feel so powerless when they're dealing with debt.
Yeah.
But there are laws in place that protect you.
Exactly. So know your rights.
Okay. What about old debt?
So this is an interesting question. Debt doesn't really go away, generally speaking.
Yeah.
However, there's something called a statute of limitations.
Yeah.
And that's the amount of time that a debt collector can sue you to collect on that debt.
Okay.
And this is going to vary by state.
Okay.
So you have to look up the laws in your state and the type of debt.
Okay.
But once that statute of limitations has expired, they can no longer sue you. Now,
they can't come after you.
right. So it's considered time-barred, and in fact, it's illegal for them to try to sue you for a time-barred debt.
Okay.
So be very careful about acknowledging old debts.
Okay.
Because in some cases, if you acknowledge it, that can restart the statute of limitation.
Oh, wow. Okay, so just be really careful, do your research.
Yes.
Okay, so what about maybe I have a mortgage or a car loan and I'm having trouble like making those payments. What should I do?
Well, the most important thing is to talk to your lender. The sooner the better.
Okay.
Don't wait until you've missed a bunch of payments, because the longer you wait, the harder it's going to be.
Right.
Most lenders are willing to work with you, especially if it's like a temporary situation.
Okay.
And they believe that you're going to be able to get back on track.
Okay.
So they might have options like a forbearance where you can pause your payments for a little while.
Okay.
They might let you modify your loan so that you have lower monthly payments.
Okay.
But it depends on the lender and the specific circumstances.
So communication is key.
Yes, absolutely. Just be proactive.
Be proactive, reach out. Okay, so what about student loans? A lot of people are really burdened with student loans.
Yeah, student loans can be really tough. So if you have federal student loans,
Okay.
the Department of Education has a lot of different programs that can help you,
Okay.
depending on your situation. So they have income-driven repayment plans.
Okay.
So your payment is based on how much you make.
Okay.
They have deferment and forbearance options, again, depending on your situation. So the best thing to do is contact your loan servicer or go to studentaid.gov and just see what's available to you.
Okay.
Now, a word of caution.
Okay.
There are a lot of companies out there that claim that they can help you with your student loans, and they charge a fee.
Yeah.
Be very careful about
Okay.
these companies,
Right.
because they cannot do anything for you that you can't do for yourself for free.
Right. Okay. So just go to the source. Don't go to one of these third parties.
Exactly. Exactly.
Okay. Now, credit card debt, that can feel really overwhelming because those interest rates are high.
Yes.
And it can feel like it's just piling up on you.
Uh-huh.
So what do you do if you're really struggling to manage your credit card debt?
Again, talk to your credit card company.
Okay.
Explain your situation.
Okay.
And see if they're willing to work with you.
Right.
They might be willing to lower your interest rate temporarily.
Okay.
They might be willing to work out a payment plan with you.
Okay.
But you have to ask.
You have to ask.
You have to be proactive.
Okay, so we've talked about this a little bit, but I kind of want to like jump in a little bit deeper.
Yeah.
We talk about getting help, right?
Yeah.
Like what kind of, credit counseling organizations or
Right.
are there other resources out there that can help us manage this stuff?
Yes. So there are nonprofit credit counseling organizations that can be really helpful.
Okay.
So these organizations, they can provide advice on managing your money and your debt. They can help you create a budget. They can even help you develop a debt management plan.
Okay, and so what does that mean? What does a debt management plan look like?
So with a debt management plan, you're basically making one monthly payment to the agency. And then the agency distributes those payments to your creditors.
Okay.
And a lot of times they're able to negotiate with your creditors to get you a lower interest rate or waive some fees.
Okay.
So it can be really helpful.
That sounds really helpful.
Yeah.
Okay, now I've also heard about this thing called debt settlement.
Yeah.
How is that different?
Okay, so debt settlement is different than credit counseling and debt management plans in that it's usually done by a for-profit company.
Okay.
And what they do is they negotiate with your creditors to accept a lump sum payment that's less than what you owe.
Okay.
Now, while you're in this program, they tell you to stop making payments to your creditors.
Okay.
And instead, you save up the money to pay this lump sum.
Okay.
Now,
what could go wrong?
this can be risky.
Okay.
Because there's no guarantee that your creditors are going to agree to the settlement.
Right.
While you're not making payments, you're going to be accruing late fees and penalties.
Yeah.
Your credit score is going to take a hit.
Yeah.
Debt collectors are still going to be calling you.
Right. So it's not like a get out of jail free card.
No, not at all.
Okay. So what about like the most serious option, bankruptcy?
Right. So bankruptcy should always be a last resort.
Okay.
Because it does have a negative impact on your credit score. But if you're just in a situation where you're totally overwhelmed and there's no other way out,
Yeah.
then it might be something to consider.
Okay.
So there's two main types of bankruptcy,
Okay.
Chapter 7 and Chapter 13. Chapter 7 is where you liquidate your assets.
Okay.
So you sell your assets and you use the money to pay off your creditors.
Okay.
Chapter 13 is where you create a repayment plan. So you're still paying back your debts,
Yeah.
but you're doing it over a 3 to 5 year period.
Yeah.
And the court kind of oversees it.
Okay, that makes sense. So finally, after we've done all this hard work,
Yeah.
paid off our debt,
Right.
how do we rebuild?
So you want to rebuild your credit.
Right.
And there's this term out there called credit repair, and people say they can like magically erase all the negative information on your credit report.
Okay.
Be very wary of that.
Right.
There's no magic wand.
Right.
The only way to really improve your credit score is to practice good credit habits going forward.
Okay, so what does that mean? Like, what do we have to do?
So the biggest thing is make your payments on time.
Okay.
That is huge.
Okay.
Because payment history
Right.
is the biggest factor in your credit score.
Okay.
So set up automatic payments.
Yeah.
Do whatever you have to do to make sure that you're never late.
Okay.
Also, keep your credit utilization low. So we talked about this earlier.
Yeah.
That's how much you're using versus how much is available.
Right.
The lower that ratio, the better.
Okay.
So basically, don't max out your credit cards.
Yeah.
Try to keep those balances low.
Okay.
And over time, as you're doing all of these things, your credit score is going to go up.
Awesome. Well, we covered a lot of ground today.
Yes, we did.
So from, just understanding our debt and figuring out a plan to attack it to really avoiding the debt trap and then knowing when to reach out for help when we need it.
Yes.
I think that this was really, really helpful.
I'm glad to hear that. And remember, it's a journey. It's not going to happen overnight.
Right.
Just take it one step at a time and you will get there.
Okay, that's really good advice. And, one more thing I want to mention to our listeners is that we have a lot more information on our website, wealthygoodlife.com.
Yes.
So please head on over there. You can check out all of our resources. And also, this is a really great topic to have a conversation about.
Yeah.
So I encourage you, go to wealthygoodlife.com, leave a comment, tell us what you thought of this episode.
Yeah.
What strategies are you thinking about implementing?
Mm-hmm.
What questions do you still have? Let's keep this conversation going.
Yeah, we love to hear from you.
We love to hear from you. So head on over to wealthygoodlife.com.
All right, until next time.
See ya.
Bye.